Hey, roofers and HVAC business owners, especially if you run family run crews. So, if you ever mix business with family, you know it's not always easy, right? And over the years, I've seen some very real financial red flags that show up in your family owned businesses, right? Things that can quietly eat away at your profits, your relationship, or both. So, today we're going to break down three of the biggest red flags I see and what you can do to fix them before they become real problems. So, if you run a family, right, own roofing or HVAC business, you already know, right, what happens at home, it can definitely show up in your business. So, I work with a lot of family run shops, right, crews with brothers, spouses, uncles, or even kids in the mix. And today I want to walk you through the three biggest red financial flags I see over and over again that can quietly hold back your business. Right. So let's make sure those red flags don't sneak up on you. By the way, hey, I'm Marika. I specialize in helping roofing and HVAC businesses grow, especially family run companies, right? So I've worked with husband and wives, brothers and sisters, right? Father, son crews, you name it. And the one thing they all have in common is strong work ethic and a whole lot of pride in what they do, but sometimes their books are not as put together. So trust me, right? I've helped clients turn that around. And today I'm going to show you how to do the same. But here's the one thing, right? Even the strongest family businesses can run into real money problems, right, if they don't catch them early. So I've seen three common financial red flags pop up again and again in family run businesses. And if they're not handled, they can quietly slow down your growth or worse, right, create serious cash flow problems. So, red flag number one, right? No monthly financial reviews. So, when I ask the roofing or HVAC owners how they check their numbers, too many times, right? Many say, I check my bank balance, right? And that right there is a big red flag. So your bank balance only shows what's in your account right now, right? So it doesn't show what's coming up, what's going out, or how profitable your jobs really are. So you might see what $40,000 in your account and feel good, but if $30,000 of that is already committed, right, to payroll and materials next week, that cushion disappears really fast. So here's how to fix it. Right. So set a time every single month to review your numbers. Look at your P&L, job costs and reports, and your cash flow. It doesn't have to be complicated, just be consistent with it. Right. So that's how you stay ahead of the problems instead of reacting to them. So red flag number two, messy or outdated costing. Messy or outdated job costing. So, if you're not updating your job costs regularly, or worse, if you're dumping everything into generic categories like materials or labor, right, you're flying blind. And this happens a lot in family run businesses where one person is wearing way too many hats. So let's say you spent $12,000 on a job, right? But you forgot to add the $3,000 labor. Now your books show you made a $5,000 in profit when in reality you only made $2,000. So that's a $3,000 mistake on just one job. And it adds up fast if you're not watching it closely. So here's the fix, right? Update your job costs every single week, right? Not just at the end of the project. And make sure you're tracking labor, materials, and overhead by job, right? So you can use software like QuickBooks or Builder Trend or even, right, a clean, consistent Excel sheet, right? Just don't wing it, right? That's where the profits start disappearing. So, red flag number three, and this one is huge, mixing personal and business expenses. And yeah, this happens way more often, right, in family run companies than most people actually realize, right? So, buying groceries on the business card or paying for your kids' tuition through the company, or even using your personal card for job materials and just tossing the receipt in, right? That might feel harmless, but it's actually creating a mess. So here's why this matters, right? It makes it way harder to see your true profitability, right? And it can actually blow up your deductions at tax time if your books are sloppy, right? And worst of all, it's a huge red flag in the audit, right? So the IRS sees mixed personal and business spending as a huge sign, right, that something's off, and they start digging, and that's not what we want them to do. So I also see this a lot, right? Owners use their personal card for business stuff, but never officially reimburse themselves, right? So they just dump their receipts into their accounting software and keep it moving, right? But that makes your books unreliable. And at the end of the year, right, it becomes a nightmare to figure out what was actually business versus personal. So here's how to fix it, right? Use one account and one card for business only. So if you're an S corp, right, pay yourself through payroll. If you're not, use consistent owner draws like once or twice a month, right? Random withdrawals and blurred lines makes your books messier than they need to be, right? And they make tax time way harder than it has to be. So keep it clean and you'll thank yourself later. All right, so this question came from a Florida HVAC business owner who runs his shop with his wife and brother. So it works, but sometimes we skip over the paperwork to keep things simple. Is that a big deal? And honestly, that's something I hear all the time in family run businesses. And here's the truth, right? Skipping paperwork might feel easier in the moment, but over time it creates confusion, stress, and even resentment, right? So I always say, right, good systems don't get in the way of family, they protect them. When everyone knows where the money's going and what the numbers actually say, you avoid the fights, the confusion, and the cash flow surprises. So whether it's your spouse, your sibling, or your kid in the business, clear records and structure keep clean books, right? That's what keeps both the business and the relationships running strong. So here's the deal. These red flags don't mean your business is failing. They just mean, right, it's time to tighten things up behind the scenes. So you work way too hard, right, to let sloppy books, unclear job costs, or missed numbers, right, hold you back from growing. So clean financial systems, it gives you clarity, right, control, and confidence to grow without stress. And if this hits home, right, check out my new blog, What Every Family Run Roofing and HVAC Business Gets Wrong About Bookkeeping. Right. So I go deeper into why DIY books get risky after hitting $500,000 a year and how financial red flags slip through the cracks and what you should be doing instead. Right. So it's not just about keeping records, it's about building real strategy that supports growth. And if you're wondering, right, are any of these red flags showing up in your business? Go ahead and book a free profit and tax analysis at my website, right? So we'll take a real look at what's working and what needs fixing before tax season or expansion catches you off guard. So I'm Marika, your accountant for all things roofing and HVAC. Let's build something solid together. See you in the next video. Bye.